So let us start the session. We'd like to introduce the attendees from our side. Representative Member of the Board, President and CEO, Mr. Akira Shimada. Representative Member of the Board, Senior Executive Vice President and CFO, Senior Vice President, Finance and Accounting, Mr. Nakamura. And Mr. Akitoshi Hattori, Senior Vice President and Head of Corporate Strategy Planning. These three are the attendees. So, Mr. Shida, I turn over to you. Thank you. I would now like to explain the financial results for fiscal year 2024 and talk about financial forecast for fiscal year 2025. So this is the overview. Operating revenue increased, operating profit and profit decreased. Operating revenue reached 332.2 billion year-on-year and reached 13,704.7 billion due to the increase in revenue at Data Group as well as the Smart Life business at Docomo. So, now of this increase, impact of foreign exchange was approximately 140 billion yen. As for profit, despite the increase in profit at Entity Data Group and Smart Life business, due to decline in mobile and fixed line telecommunications service revenue, and also Docomo's initiatives to strengthen its customer base and also improve network quality, as well as reaction to the impact of streamlining non-core assets in the previous year. EBITDA was 3,239.3 billion yen, down 178.9 billion yen year-on-year. Operating profit was 1,649.6 billion yen, down 273.3 billion yen year-on-year. Profit went down to 279.5 billion yen year-on-year and was 1 trillion yen due to drop in operating profit and rebound from gains on stock sales in the previous year. Let me now turn to consumer factors by segment, starting with the integrated ICT business. This segment recorded growth despite decline in mobile communication service revenue, mainly due to growth in finance and payment in the Smart Life business. Now, despite the increase in profit in Smart Life business as well as measures to improve our profitability, profit decreased year-on-year due to measures to strengthen customer base as well as efforts to improve network quality. However, efforts to strengthen customer base has led to steady positive results in mobile number portability. Turning to regional communication business, operating revenue and profit both declined due to decline in network revenue and reaction to the impact of streamlining non-core assets implemented in the previous year. Fiber service net additions increased year-on-year due to stronger sales of 10 gigabit plans as well as all-unit plans for the condominium market. Turning to global solution business segment, revenue increased due to capturing demand for digitalization in Japan and also impact of the foreign exchange. Operating revenue increased 300. Correction. In the other segment, we saw increase in revenue year-on-year due to expansion of data center engineering and urban solutions. However, profit declined due to impact of declining profits from sales of assets in the previous year in the other segment. Let me now turn to forecast for fiscal year 2025. The forecast for fiscal year 2025 will increase in both revenue and operating profit. With regard to operating revenue, we are aiming to record record high through increase in revenue at Global Solutions segment and integrated ICT business. As for EBITDA, operating profit, and profit, we are aiming to expand profit over medium term through measures to strengthen customer base and improve competitiveness, such as network quality, as well as expanding profit in growth areas such as Smart Life and enterprise business, and also transferring outcome of successful investment offerings to plan achieve year-on-year growth. Again, the profit we expect profit in growth areas such as smart life and enterprise business will grow, and also we want to transfer outcome of successful investments of REITs, and through that we plan to achieve year-on-year growth in this segment. We believe that fiscal year 2025 will be a year where various measures toward delivery of medium-term goals during fiscal year 2027 will be accelerated. And as such, we will actively undertake measures to achieve medium-term profit expansion. Let me now turn to the integrated ICT segment. We project increase in revenue but decline in operating profit. While there is increase in growth areas such as smart life and enterprise businesses, measures to strengthen customer base and improve network quality will be continued, as well as measures to reduce future cost burden. We intend to improve medium-term profit by creating a strong customer base with the launch of new billing plan, which is expected to take place in June of this year. In the regional communication segment, we project increase in both revenue and profit. While there is decrease in fixed voice service revenue and decline due to measures to reduce future cost burden at Entity West, there will be profit from optical service revenue, and system integration is expected to grow very strongly. Turning to global solution business segment, both revenue and profit is expected to grow due to increased revenue from DX demand, as well as sales of data center leveraging REIT. Turning to others, inclusive of real estate and energy, we expect increase in revenue but decline in profit. While revenue is increasing due to expanded housing sales at Entity Urban Solutions, there's a reaction to sales of assets at Anode Energy, which was carried out last fiscal year. So we expect increase in revenue but decline in profit for the segment. Thank you.
Next, I would like to explain our initiatives for midterm profit growth. Since we announced our medium-term management strategy, we have continued to actively invest in growth areas such as data centers and smart life business to drive future profit growth. FY2025 marks the midpoint towards FY2027, where financial targets are set, and we will continue to maintain a high level of growth investment to ensure the execution of the approximately 8 trillion yen in growth investment we communicated when announcing medium-term management strategy. Looking ahead to FY2027, we will accelerate profit growth by firmly realizing the results of these investments. Additionally, we will further strengthen initiatives such as expanding domestic and international enterprise business by leveraging group synergies and fundamental cost structure reforms through AI utilization to achieve profit expansion and achieve the EBITDA target for FY2027. Next, I would like to touch upon 4 topics. With regards to review of corporate governance, we plan to appoint Patrizio Mappelli, who has management experience at a global ICT company and expertise in advisory for business operations, as a new board member to further strengthen our global business. Also, as previously announced in March, to enhance discussions on management policies and strategies and further strengthen the monitoring functions of the board, we plan to transition from a company with an audit and supervisory board to a company with audit and supervisory committee. Through these measures, we will further enhance our governance structure. This is the bio of Mr. Patrizio Mappelli. Next, on shareholder returns. Today's Board of Directors meeting resolved to increase the annual dividend forecast for FY2025 by 0.1 yen to 5.3 yen. This marks the 15th consecutive year of dividend increase since FY2011. Additionally, to improve capital efficiency and enhance shareholder returns, we will implement a share buyback program with aggregate amount of up to 200 billion yen. Next, on shareholder count. As shown in the left graph, the number of shareholders has increased to 2.68 million, approximately 3 times after the stock split, reaching a record high. In terms of age composition, the number of shareholders in their 20s to 50s have increased significantly, diversifying the shareholder base. In addition, as shown on the right graph, the percentage of voting rights held by individuals has also increased. Progress under the medium-term management strategy since February is shown here. This concludes my explanation. Thank you very much.